Hi, I'm Brad Sugars and welcome to Business Basics. Today what we're going to look at is we're breaking down the 5 ways. Now, if you haven't seen the video on the 5 ways, please make sure you spend some time watching that and understanding how the business chassis works. We're going to first of all look at margins. Now, why is margins first? Well, basically put, margins is the most cost-effective way out of the full 5 ways to increase the profitability of the business. Now, a lot of companies want more revenue or more sales, but the problem with that is there's no use getting more sales if you're not making more money out of the business. What we're going to do today is actually break down some of the top strategies that we use on how we can improve margins. Now, if you read my book, Instant Cash Flow, or if you take a look at Instant Profits, you'll find there's actually dozens and dozens, in fact, over 60 strategies that we use when we're coaching business owners in how to improve their margins. A focus on your margins is really important. In fact, the number one thing you can do is actually find out what are your margins. Now, increasing prices is definitely one way to boost margins. And I know a lot of companies really struggle with this, but if you look at it, you could probably pick 8 out of 10 of your products or services and increase their prices. The high volume goods, you probably want to keep them relatively similar, but you've really got to look at where can I improve the prices and improve the margins. Buying better is one way to improve margins. Selling more or selling more profitably at higher price, obviously, is also another great way to improve the margins. Now, this next one is a bugbear of mine. Stop the discounting. If you want to improve margins, you've got to get rid of discounting. You know, a company that's running on 20% margins, having a 10% off sale, it's got to sell twice as much to make the same profit. It's just crazy discounting. Add value instead. You've got to make sure that instead of, say, taking $100 off an item, give me an item worth $100 that cost you $50. You know, that's far better than actually taking cash off of the sale. Now, one of the big things that we look at for improving profitability, especially for stock product-oriented businesses, so if you're a retailer or a wholesaler, if you go through your products and services or your product list and say, okay, we've got 100 different items. Of those 100 items, these 25 move the fastest, these 50 are the middle moving, and these 25 are the slowest moving items. One of the best things you can do is decrease the stock of the 25 slowest moving items and put that money straight into the 25 fastest moving items. The more high moving items, the better the profitability, because obviously you've got the same amount invested in stock, but you're turning it over far more often. Next one, improving profitability. Stop letting people just buy stuff without authority. You know, purchase authorizations, they become a pain, but they're a good pain. They stop people just spending money in the company just because they can. Let's look at the costs at another level. Setting budgets is one thing, but auditing the costs is very important, especially when you've had an economic boom time when costs can get away from you. Look, going through all of your costs and doing an audit of them and working out where you're spending too much is very important. You know, some of the accounting methods of getting costs down are important for boosting margins, especially if you're buying products and services that you're on selling. You know, if you're buying products that you're on selling, go and renegotiate with many of your suppliers, especially when economic times change, you can get better renegotiation strategies. Next one, terms of trade. The number of businesses I see where they're struggling with margin because they're lending their money to everybody. Their cash gap is killing them. They're spending money financing their customers. Look, remove the trading terms of giving people 30, 60 and 90 days. Don't do that anymore, especially for customers who've had poor payment records in the past. You've got to bring them down in terms so that they pay within either immediately up front or within 7 days. Never allow an invoice to go out saying 30 days, only allow an invoice go out to say 7 days payment cycle. You know, that way you reduce your costs of having money lent out to others and you reduce that cash gap. A great way of improving your margins. Next thing, take a look at all of your costs and just say, right, how would we remove 10% on all of these? Especially you might pick, say, your top 10 cost items. You say, all right, here we are, these are our top 10 costs, our top 10 expenses. How do we remove them and get them down by 10% apiece? Very important. Finally, one of the ones that, it's productivity based, I guess. We systematise all of the routine tasks in a company. Now, I've done a whole video on this, so please go and watch it. But essentially what we're looking at is 80% of all the tasks in your company are going to be routine. They're going to be repetitive tasks. You want to make sure that you get those tasks and you, well, systematize them so they can be done more productively, thus allowing you to reduce your wages bill in doing the same amount of work. In other words, your wages bill won't reduce, but the productivity and the amount of work done for that same bill will actually be entirely different. You know, reducing your margins is one thing that companies die from. When companies actually have less profitability, they die very quickly. You know, our goal in life is to continually improve the margins of your business. Our goal in coaching is to help you continually improve the margins. The biggest thing I can say to you is this. At the end of the day, every single day, do you know what your profit was or just what your sales or banking was? It's really important to start knowing when you make a profit. If you can know what is your break-even point. If you work out that, okay, we've got to sell 25,000 a day before we hit break-even, or 2,500 a day, depending upon the size of your business, and you work out that it's usually 3 in the afternoon before you hit break-even for the day. See, how much more excitement will there be from 3 till 5:30 when you know this is pure profit-making money? Make sure you're measuring. Make sure you know your margins. One of the keys to the 5 ways is the measuring of these numbers so that we can improve them. I'm Brad Sugars, and these are the Business Basics.